Very good evening and a very warm welcome to India. It's my honor and privilege to welcome you to this G20 high-level tax symposium on the sidelines of the third finance ministers and central bank governors meeting. The Ministerial Tax Symposium is a highly significant event of the international taxation under the G20 finance track. We have organized this symposium with the aim to initiate a debate on effective multilateral response to tax evasion, corruption, and money laundering, and also to lay the groundwork for G20's future policy response to this global challenge. We are privileged today to have an exceptionally distinguished panel of finance ministers and heads of international organizations present over here. So let me first of all invite on stage Mr. Matthias Cormann, Secretary General of the Organization for Economic Cooperation and Development. He shall be moderating today's discussion on the potential strategies for coordinated response to fight tax evasion, corruption, and money laundering. Mr. Cormann, as you're all aware, has been the Finance Minister of Australia from 2013 to 2020 and has been actively contributing to the G20 discourse on international taxation. Mr. Cormann, please on stage. As the first finalist today, we have the privilege of the presence of Honorable Finance Minister for Indonesia, Her Excellency Sri Mulyani Indrawati. Madam Minister has a specialization in monetary economy, banking, and labor economics. She has worked at the IMF and she very ably led the G20 presidency last year. Madam Minister, kindly join us on the stage. Let me now introduce our next panelist, the Honorable European Commissioner for Economy, His Excellency Paolo Gentiloni. Mr. Gentiloni, you are aware, has served as the Prime Minister of Italy from 2016 to 18, and prior to that, he was also Minister for Foreign Affairs and International Cooperation. May I request the Honorable Commissioner to kindly join us on stage. We also have with us Mr. T. Raja Kumar, President, Financial Action Task Force. Mr. Kumar has rich and wide-ranging experience, having held senior leadership roles in the Ministry of Home Affairs and the Singapore Police Force for over 35 years. Mr. Raja Kumar is a passionate advocate of the FATF. Mr. Raja Kumar, welcome. Thank you, all the distinguished panelists. We are indeed very grateful to each one of you for gracing this occasion with your presence today. I'm sure with your collective knowledge, wisdom, insight, and diverse perspective, we will have a stimulating discussion here today, and it will yield fruitful outcomes for the symposium. But before that, to open the discussion, let me please invite on stage Srimati Nirmala Sitharaman, Honorable Union Minister for Finance and Corporate Affairs, India. Madam Minister has been championing the cause for a fair, inclusive, transparent, and modern international tax system. Honorable Minister.
Thank you, Sanjay Malhotra, who's the Revenue Secretary, Government of India. Minister Sri Mulyani, Commissioner Gentiloni, FATF President T. Rajkumar, OECD Secretary General Matthias Cormann, Excellencies and distinguished guests. Let me first warmly welcome you all in India and to thank you for being here with us and participating in this very important symposium. It is a true honor to bring together this esteemed panel to build on the discourse on this important issue on combating tax evasion, corruption, and money laundering. Financial crimes such as tax evasion, corruption, and money laundering are intrinsically related to each other. For example, proceeds of corruption could have been sourced out of tax evaded money generated through undisclosed transactions or fraudulent means. Proceeds from corrupt means are usually sought to be legitimized by criminals through laundering to escape the reach of law and law enforcement agencies. Furthermore, these financial crimes are also not limited to or restricted to jurisdictional boundaries. With the advancement in technologies and openness in international trade and commerce, criminals have started utilizing sophisticated measures to transfer illegal proceeds across borders through multi-layered transactions involving various forms of assets, including financial assets, crypto assets, and real estate. It is imperative, therefore, that law enforcement agencies work in close collaboration with each other to detect and deter financial violations across multiple domains. To this end, it is important that the personnel of various law enforcement agencies are exposed to various facets involving the different statutes dealing with financial crimes so that the investigative synergies are better utilized. Furthermore, in order to fructify the work to strengthening international interagency collaboration, capacity building of officials working on financial crimes is also essential. In addition to increased cooperation between law enforcement agencies and enhanced capacity building, it is also imperative that we remain alive to the emerging risks of financial transparency. In this context, the progress of work towards the development of crypto asset reporting framework and the update to the common reporting standards is a welcome step. Besides these, we should also examine closely whether there are other classes of assets in respect of which information needs to be shared in a systematic way among jurisdictions. To this end, India welcomes the report of the OECD toward exploring the feasibility of exchange of information on a voluntary basis in respect of immovable property transactions undertaken by residents of a jurisdiction in foreign jurisdictions, which will help in initiating the discussion on this subject. During tax investigations, tax administrations acquire access to large amount of incriminating information obtained through tax treaties, which could have relevance for investigations in other financial crimes. However, the disclosure of such information to other domestic law enforcement agencies is subject to seeking consent from the foreign jurisdiction for the use of such information for non-tax purposes. In this regard, we welcome the recent report of the Global Forum that will assist interested jurisdictions to streamline the process involved in obtaining consent for the use of information obtained through tax treaties for non-tax purposes. The suggestions in the report would help to make the process of obtaining consent from foreign jurisdictions more efficient and speedy. In leveraging the interconnectedness of investigation in tax evasion, corruption, and money laundering, there is a scope for evolving solutions that can help tackle financial crimes in a more synchronized and effective way. The G20 has helped spearhead a number of reforms into the global tax, anti corruption, and anti money laundering architecture, which has helped shape the discourse towards jurisdictions not only adopting a more holistic approach to financial crimes, but also aided them to collaborate with one another. We hope that the G20 continues exploring the options to further strengthen the global architecture, to fight financial crime, and assist jurisdictions in enhancing their law enforcement capacity. Under the G20 presidency, India has taken the lead for building capacity in tax and financial crime investigation in South Asian region in collaboration with the OECD. As a first step to this initiative, it gives me immense pleasure to announce the launch of the pilot program on tax and financial crime investigation in collaboration with the OECD for the South Asian region starting from 18th July 2023 at the regional campus of the National Academy of Direct Taxes in New Delhi. We look forward to institutionalization of this collaboration and contribution of this initiative in addressing the specific needs of countries in the South Asian region. I would like to express our gratitude to all the distinguished participants and OECD for accepting our invitation to be a part of this symposium. I also thank all the deputies who have consented to represent their respective ministers in this event. Looking forward to an enriching discussion in this symposium. Thank you very much.
Thank you, Madam Finance Minister, for your very insightful remarks, and especially on the need for a whole-of-government approach in tackling tax evasion and other financial crimes. With this, now may I request Mr. Common to begin the panel discussion with his opening remarks. Over to you.
Well, thank you very much, dear Minister Nirmala Sitharaman, dear ministers, distinguished colleagues, friends all. Thank you, Nirmala, for hosting this high-level tax symposium on combating tax evasion, corruption, and money laundering. And also thank you for the ambitious tax agenda that India is championing as part of its G20 presidency. Successfully combating financial crimes such as tax evasion, corruption, and money laundering is fundamental to promoting economic stability, investor confidence, sustainable growth, fairness, and a positive international reputation. Financial crimes undermine the credibility of financial institutions, lowering investor and business confidence, and that in turn hampers a country's ability to attract private investment and generate growth. Financial crimes also create a vicious circle in which lower trust in public institutions affects citizens' and businesses' compliance with other laws and regulations, thus forcing governments to divert ever-increased resources towards prosecution and enforcement instead of being able to invest those funds in essential public services or infrastructure. And financial crimes directly deprive governments, both in developed and developing countries, of much needed resources to close key investment gaps. They are especially harmful in the current context of slower growth, increased government deficits, tightening credit conditions, and an environment in which high interest rates have exposed vulnerabilities in some financial market segments where investors are reassessing their risks. Financial crime is complex. It exploits weaknesses in our laws and institutions. It operates across international borders. And it is, sadly, it has to be said, very agile, constantly identifying and seizing new opportunities while adapting to new circumstances. During the pandemic, emergency procurement processes contributed to the proliferation of substandard products, price gouging, and bribery. Criminal actors were also quick to make illegal gains from government stimulus packages, as the urgency imposed by the crisis and the accelerated implementation of stimulus packages required the relaxation of some of the usual prior due diligence processes. And they are exploiting gaps in regulation and oversight created by the increased digitalization of our economies. For instance, using the exchange of crypto assets for money laundering and to finance terrorism, among other crimes. If we are to win the fight against financial crimes, we cannot work in silos, but rather we need to operate together as part of a single ecosystem, both domestically and internationally. First, we need well-designed legislation which enables the monitoring and prosecution of corruption, money laundering, and tax evasion. Financial crime exploits the absence of regulations as well as gaps in existing legislation, including the opacity of certain corporate structures and legal entities. We must therefore strive to close those gaps and ensure that national authorities are empowered to apply sanctions to those who infringe the law. The OECD Anti-Bribery Convention, which entered into force in 1999, was the first set of legally binding international standards to criminalize the bribery of foreign public officials in international business transactions. And thanks to its implementation between 1999 and 2019, 651 natural persons and 230 legal persons were convicted or sanctioned for foreign bribery across the 44 member countries under that convention. Other international organizations are also making very important contributions to the fight against financial crimes. In 2003, the United Nations Convention Against Corruption provided a legally binding and comprehensive approach to combating corruption. And since 2001, the Financial Action Task Force leads global action to tackle money laundering, terrorist and proliferation financing in particular. Second point, we must improve the flow of information both domestically and internationally to detect financial crimes. Exchanging financial information across jurisdictions and crossing records across the public administration, cross-referencing records, I should say, across the public administration can exponentially increase tax authorities' ability to detect financial crimes. This led the G20 to declare the end of banking secrecy in 2009 with the aim of fighting offshore tax evasion and the subsequent adoption of the OECD Common Reporting Standard. Thanks to that standard, tax administrations are now in possession of significant amounts of financial information, which can also help investigators trace illegal transactions and locate offshore proceeds of criminal activity. Last year alone, the standard countries under this standard, through this standard, countries exchanged information on over 119 million financial accounts, covering assets of more than $11 trillion US. We continue to work with you to improve the sharing of information where relevant with law enforcement agencies, while respecting data privacy, confidentiality, and individuals' rights. Third point, we must put in place adequate strategies to fight financial crimes and develop the capacity of tax auditors to detect financial crimes and cooperate with law enforcement authorities. The tax auditors are usually the first gatekeepers of the system who, in the course of a normal audit, may detect suspicious and potentially criminal activity. They need to have the necessary skills, resources, and authority to tackle tax crimes. Their ability to analyze financial information is key to the detection of other financial crimes, especially in cooperation with law enforcement agencies. Last year, we adopted the OECD recommendation on the 10 global principles for fighting tax crime, a comprehensive instrument to fight tax crimes. It covers the legal, institutional, administrative, and operational aspects of an efficient system to detect, investigate, and prosecute tax crimes and to recover the proceeds of crime. This recommendation was adhered to by all OECD countries as well as Argentina and Brazil, and I use this opportunity to encourage all other G20 members to adopt it as well. Fourth point, we must continuously address evolving threats to tax transparency and anti-money laundering standards. And we must ensure our international standards are up to date to cope with the evolving risks of financial crimes. Most jurisdictions undertake periodic national money laundering risk assessments where they identify new threats and vulnerabilities, assess the likelihood of them taking place, and design mitigation measures. Mandated by the G20 last year under the Indonesian presidency, we launched the Crypto Asset Reporting Framework, which provides for the reporting of tax information on transactions in crypto assets in a standardized manner across jurisdictions. These are just some examples of how the OECD is contributing to the international fight against financial crimes. Thank you once again for your commitment to improving international and domestic cooperation, to detect and prosecute corruption, money laundering, and tax evasion. Thank you again to the Indian presidency of the G20 for the high priority that you have given to this very important area of public policy. And with that, I will now move back to my chair over there and to get the panel discussion underway. Thank you. We've got a fantastic panel, and the MC has already introduced them, but let me just quickly remind everyone, Sri Mulyani Indrawati, the Minister of Finance of Indonesia, Raja Kumar, the President of the Financial Action Task Force, and Paolo Gentiloni, European Commissioner for the Economy. Welcome to all the panelists. And I guess to kick us off, I might just ask all of you to answer the question on how you believe finance ministers can best help ensure a whole-of-government approach to tackling tax evasion, corruption, and money laundering, and how we can address some of the evolving threats to tax transparency and anti-money laundering standards. Shri, would you like to kick us off?
Thank you, Matthias. Thank you, Minister Nirmala. Very good afternoon to all of you. I think I don't have to repeat how dangerous this tax evasion, money laundering, and corruption to any country. It erodes the revenue base. It's also erode. The most important is the credibility and trust to the government. So that is very important. How the country is going to build the capacity to attack this, I think internally each country have the obligation to develop first whether the institution can work together, because even within this tax evasion, corruption, anti-money laundering, it's not really depend on one institution, for example, like tax department, but you also need to work very closely with the law enforcer as well as the judicial system within the country. So it's a more complex than just the technocratic economic issue. Indonesia is establishing the financial task force, which is aiming for the ability for us to track the transaction, especially the suspicious transaction. And Indonesia is in the process of a membership of the FATF, which we know that this kind of crime, like tax evasion, money laundering, this cannot and will not be able to be addressed within one country jurisdiction. So within that context, Indonesia participate at the global level, the coordination, because even if you want to address and try to develop your own capacity, they can easily, the player in this case, the perpetrator, can be easily evade through other jurisdiction. So working across jurisdiction is very, very important. Global Forum for Tax Transparency, I think playing a very important role, and Indonesia is one of the members since 2009. And since then, we also receive, through the automatic exchange of information and common reporting standards, the exchange of information which is required for any jurisdiction who actually asking us to provide the information, or we also requesting information from other jurisdiction. So this is really a very good cooperation, because this kind of crime cannot be attacked by any jurisdiction. I guess what is maybe the challenge for all of us to be able to, despite all this progress being made on the automatic exchange of information, common reporting standard, jurisdiction to jurisdiction exchange of information, there are still continued challenges that need to be addressed. The first is that the data which is required, as Minister Nirmala mentioned earlier, is not only under the Ministry of Finance or Tax Department. So we really need to have a much more comprehensive data, because when it is not only related to the tax evasion related to the tax, but on a criminal activity. So how you are going to make sure that this is going to be integrated data? In Indonesia, we try to establish the database which is much more comprehensive. For the tax purpose, this is the core tax program, in which we try to integrate and have a more consistent treatment for the taxpayer as well as for us to be able to administer those information. The second one is the timely response. Sometimes we are requesting an information, but then the information which is needed for us to trigger any investigation, or in this case preventing criminal act, they come in a very delayed response. So it then have the implication that they can easily evade, or in this case erase, their criminal record. So we really need to establish what is the procedure and protocols that will address these obstacles of timely response. We also dealing with a lot of the financial digital innovation, like the crypto. We launched last year, Matthias, in this case, that we have the crypto asset reporting framework, because we can see that when you are talking about the criminal activity tax evasion, they will use any innovation that will act as a way to not only hide, but becoming even more sophisticated in hiding their criminal. So these are all the areas that we think need to continue to be improved. For Indonesia, I'm glad actually, Matthias, when I first became finance minister long time ago, when we talk about the tax evasion, I feel really alone, because we think that, okay, the criminal can just evade easily and I cannot ask any help for any other jurisdiction. Today, a lot of progress has been made, but this is still not adequate, but at least there is a progress. If it is not, then all this experience in the past 2 decades is going to be nothing. So I think I will in this case, I will use this opportunity to express my appreciation and thankful for all the progress, but homework is still a lot for all of us to do. Yeah. Thank you.
Thank you very much, Shri. Yes, I mean, a lot of progress has been made, a lot of work to be done, and it's also it's an ever receding finishing line.
Right.
The job keeps moving. Paulo, European Commission perspective.
Yes, indeed, the job continues moving. First of all, thank you to the Indian presidency. This is very timely, this kind of discussion. First of all, because I think there is a clear demand coming from our citizens, which is a demand of fairness. We shouldn't forget that we are coming from a deep crisis, and that the consequences of this deep crisis are still there in terms of increasing debt and inequalities. At the same time, we need revenues. It is quite clear that all the commitments that we have now in the global economy need growing revenues for jurisdictions, public administration. This is on one side of the coin. The other side of the coin is that evasion and criminal activity move very fast and cross-border. So we have a clear need from a social and political point of view, and at the same time we have to face with a threat which is a moving target, as you said, and as Sri just said. What is our answer? I think there are two main points. Then I will give you a few examples of the activity of the European Union on the subject. But broadly, I think we need global arrangements. The progress that we made in recent years are very much linked to the fact that we have common agreements. And by the way, we are discussing new common agreements, not exactly on evasion and crime, but on very important things, on the minimal corporate taxation and on reallocation of taxing rights. So first of all, we need this dimension, this global dimension. Without this, it would be very difficult to face evasion and criminal activity. Second, we need to link better regulation and enforcement. Both things are very important, and because now a good regulation without enforcement is not sufficient in this kind of fight. A few examples of recent, ongoing activities from the European Commission in the European Union. First, on better reporting, exchange of information. We just adopted in May a directive referring to requiring to crypto asset providers to report transactions made by EU clients. I think this is exactly the direction the OECD is working on. It will define the new rules on crypto asset information exchange for tax purposes. Very important step, I think. Second, we are facing a lot of abusive schemes on withholding taxes. According to our estimate, in the last 2 years, we had losses of 150 billion euros in the European Union for these abusive schemes. So we tabled a proposal for cross-border withholding taxation addressed to avoid this kind of cum-cum, so-called schemes that were quite effective and disruptive for the European finances. Final point, in the field of indirect taxation, we are facing cross-border fraud. Again, we estimate something like 50 billion euro of evasion per year, and 80% of this fraud is perpetrated by criminal organizations. Here we tabled a proposal in December 22. We are continuing to discuss in the legislative process in the European Union, which provides tax administration with real-time information on cross-border transactions. So you see, I could add our anti-corruption package adopted last May, which is also incorporating the UN anti-corruption scheme. In conclusion, what we see, I think, is that we are deciding, we are tabling and adopting proposals, but the process is a continuous process. And the risk is always that if we consider that we achieved a result, the problem is moving forward technologically and in a criminal way. So it's a never-ending commitment. But if we are able to cooperate among us, I think G20 is a very, very good opportunity to address this never-ending challenge. Thank you.
Thank you very much, Paolo. Now, Raja, the Financial Action Task Force is the global money laundering and terrorist financing watchdog. Share your perspectives on what you see and what you think needs to be done.
Sure, thanks, Matthias, and really good to be here. A very good afternoon to everyone. There's really no doubt that the fight against tax evasion, corruption, and money laundering present the same broad challenges and will greatly benefit from a whole-of-government approach and perspective. I support the need for stronger cooperation between the different parts of government and the development of a macro-integrated view. Far too often, we see agencies operating in silos. And as Minister Nirmala mentioned in the opening remarks, we can see that all these types of criminality are intrinsically related to each other. So they are complex problems. They need to be approached from the perspective of dealing with complexity, and there's no single silver bullet. Essentially, what I'm proposing is that we need to organize ourselves better to more effectively deal with these complex challenges. For example, by establishing standing national task forces against crime, having national crime suppression and crime prevention strategies, both with tax authorities involved. And we need to use the different levers within government to tackle these complex challenges, including the use of tax powers in appropriate cases. At FETF, we have been tackling these problems holistically from two important angles. First, the beneficial ownership transparency angle, recognizing that the criminals who are committing tax evasion, corruption, and money laundering, that they routinely hide their assets, their activities behind front companies or complex corporate structures. Secondly, through the strengthening of countries' asset recovery frameworks to enable countries to be more effective at taking the proceeds of crime away from criminals and returning it to victims. And the victims in this case could also be states and their coffers. This is about making sure that crime does not pay for criminals. Both beneficial ownership transparency and asset recovery are common denominators in the fight against tax evasion, corruption, and money laundering. The FEDF is doing substantive work on both of these issues. We have strengthened significantly the global response to tackling the concealment of beneficial ownership. And this was done through the revision of the standards on transparency of legal persons in March last year. And we then amended the standards this year in February on trusts and similar legal arrangements. The FEDF has also provided countries with related guidance to facilitate the implementation of the necessary measures so that shell companies can no longer be a safe haven for illicit proceeds. We are currently similarly strengthening the work on asset recovery frameworks to enhance authorities' capacity to quickly freeze ill-gotten gains to cooperate as well at the national and international levels, and to enhance asset recovery outcomes globally. A challenge we have frequently encountered in practice is the lack of timely cooperation and coordination nationally as well as internationally, which in then turn impedes on the effective sharing of information. It is critical that we collectively find ways to overcome these practical challenges, for example, in the national context, to enhance collaboration between the public sector with the private sector, for example, by forming PPPs. What we have noted as being really helpful is the use of the same standard, or at least the development of a common understanding across agencies, which we achieve, for example, with beneficial ownership, working with the OECD and the Global Forum. When we use the same standard, essentially this facilitates a comprehensive and consistent approach amongst authorities, and it also avoids divergent interpretation and expectations. I also believe in the added value of using tax powers for asset recovery. The FEDEP in its mutual evaluations have already recognized and given credit for tax measures in the fight against financial crime. And it has proven to be quite an effective measure in the countries that use it. So, in summary, complex problems, we need a whole suite of different measures to tackle it, and the work that we do with the tax authorities must be part and parcel of the solution that we bring to the table. Thank you.
Well, thank you very much, Raja. I'm going to try now and go a little bit deeper on some of the insights that you've shared. And Sri, starting with you. During the Indonesian G20 presidency, you championed the introduction of the new crypto asset reporting framework. Can you perhaps talk us through where you see the importance of that framework and why it should remain a key priority for the G20 finance track moving forward?
Well, first, Matthias, we know that more than 300 million people in 2022 is actually involved in this cryptocurrencies transaction. And the price is actually increased more than 5 times between 2012 to 2020. If you talk about the valuation, even almost close to 3 trillion before it was collapsed in 2022. The point is that this kind of digital technology innovation that is translated into a certain investment vehicle, it's actually, and then there is no central regulation, they are decentralized, they become a loophole which is now unintended or intentionally is creating a new challenge for all of us. This is not only related to the potential tax revenue, but they become a real loophole for any financial crime because the transfer from the crypto asset into other financial asset is actually happening. So that can be a money laundering vehicle. During the G20 presidency, Indonesia, in this case, also proposing and also supporting OECD on this crypto asset reporting framework. I think this is one of the starting point for us to understand how this potential innovation by addressing especially the downside risks of this kind of innovation. Could we actually address regarding the regulatory framework, the nature of the technology, which is very decentralized, and what kind of cooperation among jurisdiction is actually very important. How this could be prevented to become an instrument for money laundering and financing for terrorism, including for the tax evasion. And that's why Indonesia will support, and hopefully with the India presidency and further for Brazil, we want this to be one of the key priority that need to be continued, also discussed within the finance track on the G20. I think there are still a lot of unknown factors for us. Many countries not yet settled. For example, in Indonesia, we actually discussing whether this crypto asset is something that can be treated like commodity, or this is more financial asset, whether it should be governed by the commodity like exchange, or this is more financial exchange, whether we need to establish a centralized exchange management, or this is continue decentralized. This is still very early, and that's why before we can actually then potentially facing with potential systemic risks that is on financial sector stability, but also providing and allowing this kind of innovation to become a loophole that can evade tax as well as become an instrument for the criminal activity. The G20 is the right forum for us to continue not only discussing but continue also addressing this potential risk. So yes, Indonesia will continue promoting and advocating this crypto asset reporting framework as a starting point.
Well, thank you very much, Shri. Raja, could you perhaps talk a bit more about the complementarities between the work of the FATF, the work of the OECD, and the work of the Global Forum on tackling tax crimes and other financial crimes?
Yeah, thanks, Matthias. There are definite, what I would call clear and present complementarities. And in fact, I think a defining moment for us was when we essentially included tax crimes as a predicate offense to the FATF standards. And this was done way back in 2012. And this has led to far greater cooperation between the OECD and FATF. This complementarity and cooperation notably materialized through two major ways. One is the fact of formal structures. And in this regard, the OECD is an observer at FATF meetings. So, monitoring exactly the developments, and you have a very good sense of what the latest changes to the standards are and so on. There are also obviously lots of potential in terms of how we could work with each other and have worked with each other. So let me just cite a few examples. In the area of corruption and bribery work, I note that the OECD participates in FATF's current projects. For example, the current one that we are doing on citizenship by investment. And the FATF on its part then regularly attends the OECD's working group on bribery. On tax crime, FATF participates in the OECD's task force on tax and crime. There is definitely material interconnectivity between tax and AML matters. And I think that this is a very timely discussion because of the ongoing work at FATF on asset recovery. I mentioned, in my previous intervention that what we are really trying to do is, on one hand, we are illuminating exactly how criminals are exploiting legal structures, legal persons, and trusts and other legal arrangements. So that light, that spotlight is shining very, very clearly in that space, and it exposes exactly how criminals are actually going about their criminal enterprise and essentially funneling monies through corporate structures and legal arrangements. The second dimension is what we are doing in the area of asset freezing and asset recovery. And this is actually, to me, a very fundamental strategy because you're going after the proceeds of crime. And when you are successful in going after the proceeds of crime, you actually cut off the lifeblood of criminal enterprise. You're actually preventing them from committing more ambitious acts of crime and terrorism, and essentially building up new capabilities as well that their ill-gotten proceeds may actually bring to the table. And you're then, essentially keeping societies safer. So, there's a lot that actually goes into this. And since we started work on revising the FATF standard on asset recovery, what we noted is that many countries do not think about tax authorities and tax information in the context of financial crime and asset recovery. But as we've heard today, crime and tax do mix. Criminals are evidently, avoiding taxes, and criminal enterprise is definitely exploiting this space. So in this regard, the OECD has provided critical input on how the role and the powers of tax authorities can be useful in the context of asset recovery, and our upcoming work on releasing related guidance on the enhanced asset recovery standard will also benefit from the OECD Task Force on Tax and Crime's expertise in terms of pursuing the tax angle in asset recovery.
Well, thank you very much, Raja. A lot of activity and a lot of cooperation there, which is great to hear. Now, Paulo, the fourth and the fifth anti-money laundering directives required member states to establish beneficial ownership registers for legal persons and legal arrangements, and these national registers have now been interconnected through a central EU register of beneficial owners. Can you talk us through how that is supporting or delivering benefits in terms of tax transparency work? And what do you see as the next frontier when it comes to improving our efforts to tackling financial crimes in the tax space?
Yes, indeed, Matthias, this was part of a package on anti-money laundering that we proposed in July 21. By the way, within this package, we've also established a EU new anti-money laundering authority, which is, I think, an interesting scheme. In this package, we established this beneficial ownership registers interconnection system, acronym BORIS, sorry for the acronym. This mechanism, after ruling of the Court of Justice, was also adapted to the challenge of privacy, data protection. Now the registers that are interconnected among member states are available for tax authorities, for anti-money laundering and anti-evasion purposes. They are not open to the public overall, so to say, because the ruling of the Court of Justice was, the European Court of Justice was authorizing this, provided that the scope was this one. I think this access to final beneficiaries is crucial, to have it exchanging information between the national authorities and national registers is essential. In the future, further step, I think we would work to facilitate availability of beneficial ownership information on a global scale, work on appropriate mechanism for sharing information in our respective registers, and of course we are happy to share the experience that we had also with this protection of data dimension in this area. Let me add that the field of immovable property is key. So sharing data from these registers of beneficial owners of real estate, I think it would be a considerable step forward. So I welcome the initiative of the presidency to put on the agenda this topic, showing the path to expand the cooperation. And one work stream to expand it could be exactly the real estate sector. Thank you.
Well, thank you very much, Paulo, and thank you very much, everyone on the panel. But one key factor behind international public policy success in this area and in others is continuity through the different presidencies. And next year, Italy takes over the presidency of the G7 from Japan, and Brazil takes over the presidency of the G20 from India. And we have with us for Italy, Riccardo Barrieri, the Director General of Italy's Treasury, and we have with us from Brazil, Tatiana Rosito, the Secretary for International Affairs at the Ministry of Finance of Brazil, who both have agreed to say a few words. So perhaps we can start with you, Riccardo. You can come up to the podium and make a few remarks.
Thank you, Matthias, and many thanks for the invitation. I think the topic that I've been asked to briefly talk about is the International Academy for tax crime investigations. Since 2013, Italy has hosted the OECD International Academy for Tax Crime Investigations within the facilities of the Tax Police School in Austria near Rome. These, the academy includes OECD experts and other Italian and foreign investigative units. It has been replicated in other countries, including Argentina, Kenya, and Asian countries, as we heard from the Indian Finance Minister. In the coming months, a new tax academy for South Asia that will be established here in India. I think this initiative stems also from the fact that perhaps unlike other countries, Italy the tax police in Italy is a unit that actually looks at a broad set of issues, not just taxation, but also smuggling, drug trafficking, and obviously combating tax evasion and fraud. It has a very broad mandate and high standards of education and formation. And that is where this tradition that led to the idea of the Academy came from. The Academy has fostered an improvement in investigative skills and sharing of best practices, as highlighted in the 2021 OECD study on the impact of the Tax Academy. The training provided tax investigators from developing countries with skills and techniques that were transferable to their domestic context and used in practice in the years following their participation. Italy is also participating in the OECD Task Force for Tax Crime. The 6th OECD Forum on Tax Crime will take place in Rome in December and will be an opportunity for tax and law enforcement authorities to exchange views and make progress on the issues addressed by this symposium. Perhaps if I have one more minute, I will just say a few words about what the whole of government approach means in practice. Of course, my side of the ministry does not deal with taxation, it's the Treasury, but I do chair the Committee for Financial Security, and that committee brings together not only our tax police, but also the tax agency, the customs agency, financial intelligence, our anti-organized crime units, anti-corruption, the information services. And we find this to be extremely beneficial in terms of cooperation and being able to identify individuals that are related with financial crimes and seize their assets. Finally, I would say from a more international point of view, I think the other speakers have already talked about the importance of integration and consistency. And for instance, the fact that we now have standards for the identification of beneficial owners is a very important aspect in this integrated approach. It is important to constantly upgrade the domestic and international legal frameworks. We also need to recognize the fact that there is a growing complexity in the phenomena that we're trying to unearth. And so we need to establish interlinked, digitized databases accessible to different government agencies. And finally, a further important element is the constant updating of international standards and their adaptation to the developments of the economy to avoid the emergence of new loopholes. Crypto assets and digital currencies risk undermining progress made on taxing financial assets. So implementing the new OECD reporting framework on crypto assets should be a priority. EU member states, as was mentioned before, have already agreed on the amendment to the Directive on Administrative Cooperation that will allow the exchange of tax information on crypto assets from 2027. Thank you.
Tatiana.
Well, thank you very much. I'll be very brief. Thank you for the Indian Presidents for the invitation to speak here today, and the OECD, who is jointly organizing this forum. I think that it's very clear that I won't repeat what other speakers from Minister Nirmala have said that about the whole of the government approach, the importance of global cooperation on that. I think those are topics I'm very honored also to represent my minister here, and our Inland Revenue Service that actually is responsible for most of the taxation issue, but also our central bank. I think I'll just share very briefly that we support very much the agenda. We think it's crucial for the soundness of our financial system, and actually ultimately for the cohesion of our economies and societies and growth as we go forward. So in our future presidents, we will give all the support to this agenda, considering the common threats and of the issues that we have discussed today. It's essential to support all partners and organizations in this global effort against money laundering, predicate offenses, and the Financial Action Task Force is also the most important body on this issue. Will continue to work together as a member. We also think the mutual evaluation process and the definition of a common standard is key for this goal. So FATF is now preparing its fifth round of assessments and the modifications to better tackle emerging threats and all the virtual assets, cyber-enabled frauds, and among other crimes. We consider it very important to improve the measures also to ensure beneficial owner information and to increase transparency of legal persons on a global scale. But I think my most important also a part here is just to mention that Brazil has also recently on crypto approved a law that deals with the issue. This was in late December 2022, and most recently in June, we have enacted the decree, the legislation that makes the Central Bank of Brazil the institution that is responsible for authorizing and regulating and supervising monitoring crypto assets in Brazil, including governance of the entities that could deal with that. So I think with this, this is a very important step for us, for Brazil, and will also have certainly, I mean, its impacts in our future president of G20. So we think, we know that this, the risks of crypto assets are also increasing. We have now also formally our legislation and our central authority to deal with that. We are of the view that the G20 should continue to include this topic as a priority. So, and in advancing to shed light on all these operations. In Brazil's jurisdiction, we also think that in the spirit of all that we have discussed here today, we cannot move in isolation. I think we'll only really rightfully and fruitfully address this issue if we work together. And the G20 is a very important and crucial forum for that. Thank you very much.
Well, thank you very much, Tatiana, and that. Yeah. Now, this concludes the panel. I mean, what a fantastic panel, some great final speakers. Thank you so much, Minister Nirmala, for hosting this important symposium and also for the ambitious tax agenda that India has been championing through its G20 presidency. I mean, I think the concluding statement really is that this is an area where we really need to continue to work together to be successful. We need to work together as part of a single ecosystem, and we need to continue to work together to stay at the leading edge and to stay ahead of the curve. And certainly from the OECD's point of view, working with others, working with the G20 and countries around the world, we will continue to do our bit to help provide like the most impactful platform for international cooperation on in this space that we can possibly be. So thank you for giving us the opportunity to have this conversation today, and we look forward to working with all of you on this into the future. And with that, I hand back to our Master of Ceremonies. Thank you.
So thank you very much to all of you present over here today for having taking your time out for this very important symposium. And my special thanks on behalf of the Indian Presidency to all the panelists over here, especially Excellency Mulyani Indravati, Excellency Paolo Gentiloni, the FATF President, Mr. Rajakumar, and the moderator, OECD Secretary General Matthias Cormann, and of course, Mr. Ricardo and Ms. Tatiana for their participation in this symposium. It was indeed a stimulating discussion, and I'm sure that the suggestions and the guidance that has come will certainly go a long way in guiding the future work of G20 in the tax transparency agenda. So thank you very much.